The path to financial freedom, balancing assets and cash flow. Hello and welcome to yet another video in financial independence. This is episode number 51 on Every Kwacha channel, YouTube channel, where we talk about all things investing. So today I want to talk about having the right mix of assets and cash flow, something that is very important for your financial journey. So financial independence is having a right mix of assets and cash flow. So what do we mean by assets? Assets these are resources that have economic value and are expected to provide you future benefits. There are so many assets out there. Typical examples are real estate. So we're talking about land, buildings, and things like that. Stocks. So this is equity in companies, bonds, businesses, intellectual property rights, and things like that. So these are assets. They have economic value and they are expected to provide you with future benefits. What do we mean by cash flow? Okay, so this basically is the movement of money in and out of your account. Okay, as money moves in and out of your accounts or out of your hands, we call that cash flow. So cash flow can be positive or negative. Positive cash flow means that there is more money that is coming in than money that is going out of your hands. Negative cash flow is basically the exact opposite of that. So meaning that there is more money coming out of your hands than coming into your hands. Okay, so the sources of cash flow, there are so many out there. The typical examples I can give are salaries and wages. So you work for this company and you get a salary at the end of the month or at the end of a given period. That is your source of cash flow. Rental income, so your rental property that you let out, and the tenants pay you rent. That's source of cash flow. Dividends from stocks, interest from bonds and savings, and profits that you get from your business. All these are sources of cash flow. So I did talk about the fact that financial independence is having the right mix of cash flow and assets. So in the next 4 slides, I'll talk about the different, mixes, if you like, of assets and cash flow. So whoever you are, whatever it is that you are doing, you fall into one of these 4 categories. Okay, and I think as we go to describe each of these categories, it will be very clear to you where you fall given your current financial situation. So the first category is asset poor, cash flow poor. So I'll be using the word poor and rich in relative terms, not in absolute terms. Okay, so the first category is asset poor and cash flow poor. So this is the most financially vulnerable position that you can find yourself in as an individual, where you have no assets to talk about, and basically you have no cash flow to talk about. So individuals in this category have very few assets. You have essentially no possessions or very few possessions, and you struggle to meet your most basic needs. Okay, so this is a typical person living from paycheck to paycheck. Very little money that you get, say, from your job, and you don't have any assets, no investments, no savings. So this is the lowest level that you can find yourself in on this journey to financial independence. Zero assets, zero cash flow, or negative cash flow, if you like. So, asset poor and cash flow poor. Second one is asset poor, cash flow rich. So, most of your friends who you think are doing fine, most of the people in the so-called middle class, they will typically fall into this category. So they have a job that is high earning, or they are sufficiently paid, um, and they are able to you know to afford one or two things. They can buy cars and things like that, but there are very few assets. There are very few possessions that can be considered assets to give them, that economic value that is desirable for their future. So these are individuals with a high income but haven't accumulated significant assets. Okay, so this could be high earning professionals. They spend most of their income on lifestyle expenses, because they have a very big job, good job, but they have no savings, they have no investments. Okay, so they have good cash flow in the sense that they have an income, say, from a job, but their long-term financial future is not standing on very solid ground. Okay, so this is what we mean by asset poor, cash flow rich. It's a big improvement from asset poor and cash flow poor, but there is a lot that still needs to be done. I think you still need to move from this quadrant to a more, financially secure quadrant, so to speak. So let's go to the third category. So this is asset rich, cash flow poor. The typical person that you find here is one who say owns a lot of like land, or a number of plots, like they have like 12 plots, but they don't have money to build, to finish constructing even on any one of those plots. So these are individuals who own valuable assets, but they have very limited liquidity, liquid cash, or income. Okay, so they have assets which are not liquid. Good examples of assets which are not liquid would be, say, houses and land. It's very difficult to sell those. So you have assets, but they are not giving you, cash to live on, so to speak. Okay, so like you own large, expensive house, but you have little savings or income to cover your living expenses. This also could be someone with a lot of money tied up in a business that is not currently generating a lot of income. Okay, so this is an improvement from asset poor to cash flow poor. I'm not so sure how much of an improvement it is from asset rich and cash flow, from asset poor and cash flow rich. Yeah, but it is not an ideal position to find yourself in. Okay, so the final and last quadrant, which really is an ideal position for you, who is on this journey to financial freedom. This is the gold standard for financial freedom. It's asset rich and cash flow rich. So you want to find yourself in this category. This is the reason why we are on this journey to financial freedom, because we want to have assets and we also want to have cash flow. Okay, so these are individuals with significant assets, okay, or a considerable amount of, number of assets that generate a steady stream of income. Okay, so people in this category, they have achieved relative financial independence, and they have the ability to live comfortably, not relying on employment income. Okay, so this is where you want to be. You want to have assets that give you, cash flow. Assets that give you cash flow, and they help you with your living expenses. So this is what asset rich and cash flow rich is all about. Okay, so what does it mean? This means that you should be striving to invest for both cash flow and assets. So how do you go about investing for cash flow? Here, the goal is to generate a consistent stream of income. Okay, so common investments that would give you cash flow would be like bonds. Bonds, they provide you regular interest payments, and so they are very good for your cash flow. If you have stocks that pay out dividends, on a consistent basis, this is also very good for cash flow. I have a few, without mentioning names, there are a few companies on the Lusaka Securities Exchange who give up to what, who pay out dividends even like 2 or 3 times in a year. Okay, so those dividend paying stocks are quite good for cash flow as well. Real estate, if you have rental property, you have flats, you have houses, you have a block, like business, um, like maybe office space that you can rent out. This would generate rental income for you on an ongoing basis, and that's very good for your cash flow. So that's how you go about investing for cash flow. Of course, these are not meant to be, the examples I've given are not meant to be exhaustive. There are quite a number of other ways, but these are quite the common ways, and you might want to look at these as you strategize for financial freedom. Okay, investing for assets. The goal here is to build long-term wealth through appreciation. So you invest in something, and over a period of time, the value of what you're investing grows. So if you say buy a car today, over a period of time, the value of that car will typically drop. Okay. If you bought, say, a house or land, ideally typically the value of that house will go high over time. Okay, that's what we mean by long-term wealth through appreciation. So as part of your portfolio, you want to have assets that grow in value over time. And common examples here are stocks, equity. So these are, there are stocks that have the potential to grow over a period of time. We're talking about real estate, talk about businesses, investing in index funds or mutual funds. Okay, so you should be investing for assets, just as you should also be investing for cash flow as well. Okay, so now what is my approach to balancing cash flow and um, and assets in my portfolio? So for me, um, speaking of the two key investments that I talk about here on every quarter, that's bonds and shares, or bonds and equity. My approach is that I invest in bonds for cash flow, and I invest in equity or shares for assets. Okay, so I find that bonds like provide me stable and predictable income through their coupon payments. So if you've invested in bonds over a period of time, you reach a stage where every month or every other month you are getting coupons, and those coupons are the value of those coupons, the total value of those coupons are high enough to provide you with the much needed cash flow. Okay, and given that bonds are generally considered to be less risky, I find this very attractive. So I'm a very big um, believer, for lack of a better term, in government bonds, especially, and I typically use them for cash flow. I like the idea of that stable and predictable income coming in every month. Okay, so I continue to invest in bonds. And even when I get my coupons, I reinvest all or some of it. Okay. Uh, but I also use stocks, that is equity. I invest in equity for assets. I think that, for bonds, they once you invest in a bond, from that particular bond, you get that's fixed income. So you know over a 10-year period, 5-year period, 15-year period, you know exactly what you'll get. That's slightly different from stocks, which have the ability to appreciate and even depreciate actually. So I invest in stocks for that, potential for them to give me higher returns as they appreciate, as they increase in value. Okay. They are generally considered more riskier than bonds, but they provide uh, potential for long-term growth. So I still continue to invest in stocks. So bonds for cash flow, equity or stocks for assets. And this works very well for me, because at any given time, even when the value of stocks is going down, I don't freak out. I can still rely on the steady income I'm getting from bonds. So that's my approach to how balancing between cash flow and assets. So in conclusion, what is it that I'm talking about? Okay, so just to remind you that achieving financial independence hinges on a balanced approach to asset accumulation and cash flow generation. You will need to get the right balance. Depending on your future goals, your current financial situation, get the right balance between these two. Okay, understanding where you currently stand within the four asset cash flow categories is very crucial for your strategic planning. So, are you in category one, asset poor, cash flow poor, or is it category two, asset poor, cash flow rich, or is it three, asset rich, cash flow poor, or are you in the fourth category, um, of asset rich and cash flow rich? So where do you stand, and what is your next step, and how do you go about executing or planning actually, and executing your plan to get you to achieve the goals that you've set for yourself. So that's very important that you understand where you stand within those four categories or quadrants. And so a right mix of bonds and equity can help you achieve the financial independence that you so desire. So how much of bonds do you need? How much of equity do you need to invest in? And how do you balance those two to give you the right mix of cash flow and that is predictable month in, month out, and but give you enough also investment in stocks for future, appreciation for those assets. Okay, so that's very important for you. And as you go about your journey to plan and to execute, these are some of the things that you need to be considering. Okay, so that's what I had for you on this, you know, uh, with respect to this particular video. I was talking about the right mix between cash flow and assets. Okay, so this is my 51st episode, and the date is April 14th. Until next time, when I bring to you another exciting episode, it's bye from me.